Welcome back, everybody. During our last session, we explained the difference between actual cash value, or ACV, and on a settlement option for an HO3 homeowners policy versus the replacement cost. The important thing to remember is that the base HO3 policy includes ACV contents coverage. That's usually at the rate of about 50% of whatever your dwelling coverage is. Now, to receive the replacement cost coverage, there must be an endorsement on your policy. It's not an automatic thing, so your agent needs to endorse this to your policy. Make sure that your policy is written with the replacement cost endorsement on the contents. This will usually increase the contents coverage to about 70 to 75% of whatever the Part A dwelling coverage is. Another very misunderstood section of the homeowner's policy is regarding the Special Limits of Liability section, otherwise known as the sublimits section. There's 11 types of sublimits in all. Today we're going to discuss just a few of the sublimits within your policy so that you get a good understanding of how this really works. Now, the reason why an insurance company places sublimits on certain possessions are two main basic reasons. These types of property can carry higher values than typically, and they fit in compact places, which makes them easy and attractive for burglars to break in and to take. The second reason why an insurance company places a sublimit in your policy is that these are the types of property that may present what they've termed a moral hazard. It's an easy way to define moral hazard is that these are items where the temptation to embellish or pad a claim may be present. So this is two of the reasons why the insurance company puts a sublimit within your policy. Now, with these sublimits within your policy, the insurance company is limiting the payment, unless you want to place an endorsement on selected items to purchase additional coverage on these items. This usually entails also providing additional premium as well, so you have to make a value judgment whether you want to pay the increased premium to get the increased coverage. Also remember that the sublimits do not represent additional coverage over and above the contents coverage. They represent limitations on the coverage. This is, again, very misunderstood by a lot of policyholders, especially when a loss is occurring, and they thought that these were additional coverages in the policy, and they're actually limitations. So back to our original illustration during our 101 series on the insurance policy. We have always talked about $150,000 in this home for the contents coverage. Last week we discussed actual cash value versus the replacement endorsement. This week we're going to talk a little bit about the sublimits. There's 11 in all, but we're just going to talk about 5 or 6 of the very common ones that affect a lot of people. Money coverage. The sublimit on money is $200 in most policies. Some companies will vary these sublimits a little bit in order to make a little bit of a differentiation for their product in the marketplace. But most policies are going to be right around these limits. Money, $200. Really, the insurance company places this to encourage you not to keep large amounts of money in your home. If you typically have $1,000 of money stuffed in an envelope somewhere and it ends up disappearing due to a large loss situation where you're making a claim, just be aware that the insurance company will only replace $200 of that loss. When we talk about jewelry, firearms, silver, goldware, there's limits such as jewelry and furs, $1,500, firearms, $2,500, gold and silverware is $2,500. Now, these are sublimits that limit the loss from burglary only. there's a difference between a catastrophic loss on a fire or a storm, tornado such as that, or burglars breaking in. These limits do not apply if you have a loss due to a fire or one of the other named perils within your policy. So do know that if you've got jewelry in your home and it's over $1,500, that does not mean that the insurance company only pay $1,500. They will pay the jewelry as contents in your home on a catastrophic loss, but again, it gets down to proving what jewelry you actually had. This is another reason why insurance companies want to put endorsements on some of these items, because these can add up to quite extensive dollars that can really eat into your contents coverage on a large loss situation. So when you do put a rider on or an endorsement to get increased jewelry, firearms, business property coverage, these are coverages over and above what your contents coverage is on your base policy. Another area that is often misunderstood, there's a lot of home-based businesses these days and offices within homes that are used for business purposes. If you have a large loss situation, just be aware that the business property within your home, if you have a dedicated office, you're going to have a $2,500 limitation, and you would need to get a business property endorsement on your policy in order to increase those coverages up to what maybe they should be. Again, business property away from the premises is limited to $500. Really looking at computer laptops, things such as this that could be stolen out of your car. And so just be aware that if you don't have the business property away from home endorsement, you will have a $500 limitation when you go to put a claim in on that. So again, not to get too deeply involved in this, just to give you some idea about and make an awareness of that there are sublimits within your policy. Suggest you read your policy to make yourself better aware of these things, and I hope once again that this explanation has been helpful to you. Until the next time, we'll see you later.